Hello, hello, hello. Mic test. So, guys, let me just check the audio at my end before I proceed with the actual content. Let me just check the audio at my end before I proceed with the actual content. All right. Looks like I'm audible. And looks like I'm audible. Okay. So, let's begin with our 75th edition of the Trading Opportunities webinar. Guys, I'm Nirav, as you already know. And before we move with anything at all, let me just go over the legalities here. So first of all, the disclaimer here on screen suggesting that all content presented here is purely for educational purposes. I'm not soliciting buy or sell. If you do go on to use the views presented here for your trading, investing, or for any other purpose, you yourselves will be liable for your profit loss or loss of profit. Now, let's just have a very quick small introduction. So my website currently is going under server updates, so I think it is not accessible at the moment. Should not take a long time, but uh, going with the what we have on screen. So this is the YouTube channel of 50 market analysis, and currently we are live with the 75th edition of the Trading Opportunities webinar. In the past 73 webinars, I was able to capture 104 big moves. What happened with our 74th webinars discussions, we will see today. And this webinar is broadcasted live on YouTube alongside with the LinkedIn. Lastly, we go live every Friday at 2 p.m. GMT. Today, I'm running a little bit late, about 15-16 minutes or 7:30 p.m. IST. So, whichever time zone you are in, just convert it. Other than being the owner of the website 50 as market analysis and the YouTube channel, I also am the author of the book Think with the Markets, which is available on Amazon. So let's remove the introduction part at this point and proceed with the actual content. The way we will proceed is first of all, I'll go over the chart of EURUSD followed by crude oil, gold, S&P 500, Nifty, and at the end BTC. So first of all, let's have a look on EURUSD and see what's happening here. Yeah, by the way, guys, if you are currently live and are accessing the chat via your phone or whatever, do not forget to say hi or hello. So yes, let's now proceed with our first chart, which is EURUSD, and here on screen, the idea that we were tracking on this chart was that from this point of reference, is the price level of 1.12761. Time is about 18th July, right? So date is about 18th July. So what we were tracking was the idea that we are going to see a pullback in three waves till this white trend line. Let me just go back to a higher time frame and show you what I mean. So this white trend line extended in time. Let me just increase. Yes, it should be pretty visible now. So the idea was that the market will go back down, and if it takes a support, then I'll be looking for long trading opportunities. Now it indeed did go down, but what I'm not liking is the fact that it was a little bit too deep and went sort of inside the trend line as well. It still does not invalidate the complete idea. So let's just quickly check what the idea really was. So the idea basically was that this is a triangle, as you can see from here. And the idea was basically that the BD trend line, which is this trend line, is retested, then it will generally give a good long trading opportunity. Now, as I said, it is still a valid idea, although we did see a little bit too much of a break inside the trend line. So let's now discuss the possibilities of how things can proceed. by going back to the 15-minute. By the way, I was successfully able to take short trades in this downward movement and also able to track this diagonal while it was forming in live market. As a matter of fact, I did exit literally here, literally near the end of the move. So I'll show it later on in my Slack post, but let's just focus on what's happening right now. So what is happening right now is that from this point of reference, which I just said was around 1.12768, we seem to be having a simple three-wave move down, which is the bare minimum a correction will require. So a simple three-wave down, a bare minimum a correction will require is basically all I'm talking about is a Elliott Wave zigzag kind of correction where the first leg down is called an A, the move to the counter direction is called a B, and the next leg down is called a C. So in this case, as you can see, the A is complete, the B is complete, and C is complete. And hence, if the market wants to continue in the upward direction, all we can see is a straight move from here, definitely possible. But things are not as simple as that. They generally are not. There is a secondary view that is coming to my mind, which is because it has already sustained below the trend line a little bit. I think we are better off considering both possibilities. And the second possibility that's coming to my mind is basically that what if this whole thing is a impulse in the downward direction? Let me remove this and show you what I mean. An impulse like this, a one down, a two up, another one down, let's say a dot one, and then it's going up for a dot two, and then it will be down for a dot three. Now, of course, we don't have evidence for it, and the general idea would be for the market to break a level, an important downside level such as this 1.0937. So if the market goes below a level like this, then definitely we should consider selling opportunities instead of what you call long opportunities. So I have pushed an alert on it for less than. However, it will be better off if we track this level. Let me mark it and write it down. It is between 1.10604 to 103. So if the market comes between this box, which I've just drawn, and then reverses, then that gives us an idea that the bearish side is strong. But at the same time, if the market sustains above this box, right, above this box, let's say it goes above it like this and then takes a support over it and then decides to break the high, this high, then this will be a long setup. So this is a simple way I am making this distinction, but do keep in mind this is a rough way. It is not going to work all the time, but this is just one of the few things which I use. And in case you are wondering where these levels are coming from, I have just taken the 50-60 retracement of this move from 1.11463 to 1.09103. So Euro USD, long story short, is a little bit of a wait and watch scenario here. Both upside and downside movements are possible. I have given the reason why we have changed the analysis a little bit. Basically, why we are considering both possibilities right now because of the trend line thing. And I think this just covers all the points. Lastly, as I was saying, I was able to capture all these or part of this down move in live market. Where is that? Yeah, there it is in the Slack group. There's the post. I did more shorts. This was one with big commentary, etc., etc. This was a scalp I did. I was holding this short for quite some time, I think. Let me see where the original short was added. And this is where I added the shorts for the first time. The price was 1.09462. And I traded it to the downside from there. Multiple shorts I added. I did more shorts, booked partial profits. added more shorts again and closed all shorts. So let's see where is the last exit I made. 1.09324. So this is the moment I was able to capture in live market and spot this diagonal pattern in live market as you can see over here. So in case you are wondering, the Slack group is now out of beta if you were not following our past posts. And we have already crossed the 1 month mark. All 4 weeks, I think it will be now 5th or 6th week something, were profitable. And all these trades are posted live. If you are interested in joining, you can always visit 50s.com/contact us. The link will be in the description of the YouTube description section and request access to the Slack group or ask details for access to the Slack group. It is still a request only mode. Now with that out of the way, let's now head over to our next chart. Crude oil. This one also we discussed in the last webinar, and there was actually a trade which was initiated in the webinar itself. So the webinar was conducted last time on 28th of July. And I recall I had some positions here which were short. Actually, I recall it very clearly. 28th July, 28th July. So I was short and my stop loss was here when we were doing the webinar. Yeah. And then the idea was that if the stop loss is hit, which was hit, then I will look to reverse the positions to the long side. And it played out pretty well. It did go up good enough from 80.70 to 82.34. So it was a good enough move. But now let's see what's happening right now. So the analysis that I personally had was that this market can reverse substantially from here. And we were already expecting this big fall. But second thing that I was expecting was that the market will only correct within or below or remain below this blue, this trend line, right? So that did not happen. The market was able to come above it, and then it is basically trading a lot above it. So that brings an update to this analysis. Now I think that this market is possibly inside a wave 4, and it is also possible that the wave 4 is complete here and then it will just go up from here. But let me just show you what this wave 4 is. So this is your wave 1, this is your wave 2. Check very quickly, 1 second. I think there can be a one second. Consider this as our new point of reference, which is 6.824, and this will be your wave 1 up, the 2 down. And I think we are going to continue this as the 3 here, and then the 4 here, and the 5th here. Now, considering that this 2 took a good amount of time, this 4 should take generally a little bit more than that. That's why I'm considering that it may continue sideways a little bit more before going up. And if we are to consider this part again, this will be a high degree wave 1, let's say single bracket 1, single bracket 2, etc. So that's about it for our count. Now let's come back to our shorter time frame analysis. Now, if this market is really going sideways, is going to go sideways, then I think that it can go as high as what is this? 83.81 something level. Let's say 83.80 level. And still remain sideways. So what I do mean by that is that if I draw this trend line, just a line, then we can expect price action something like this. That is very common among triangle structures to form a what do you call a structure like that, and generally it is to trap the longs which will enter here or above this level of 82.454. So any longs which enter above this will not be able to hold it most likely when the market moves down, and then they will enter shorts, and then after a while the market will remain sideways, and then they will not be able to hold the shorts. Their stop losses will eventually hit if they do not exit when the market goes back above the level. So that is the pattern I am expecting right now on WTI crude oil. So of course I will look to play it just like that. And currently I think we may have completed the A. This is currently going sideways for B, and a little bit upside for C is still to come. Zigzag correction is basically what I'm talking about here. So long story short, crude oil, I'm expecting more upside movement, but sideways and then upside instead of just straight up movement. And as I said, the market can remain sideways as long as it is below 83.80 and continue sideways for quite some time before taking out that level. It may not take it out, but that's just the general thesis I will like to follow along on WTI crude. Nothing much to add here. Hopefully, I was very clear here. And now let's head over to our next chart, which will be the chart of gold. This one is a little bit too much answer, so I'll just go on the simpler one. So on the simpler, or what you call simplified analysis, what you can see here is that from this point of reference, 1987, what we have is a possible zigzag in the downward direction. So again, as I've talked so many times about zigzag structure in our past two charts, it is a three-wave structure in Elliott wave terminologies, which will have a wave down, the B wave up, a C wave down, and the expectancy is that when the C is complete, we will see upward movement. Right. So in this particular case, the A was here. I'm taking the B as here, and 1 second. Let me see if I have an alternate view here. What is happening is I don't think counting from this point of reference down for a C makes any sense whatsoever. So that's why I'm updating the analysis right here. And now the trend lines don't make any sense. So they don't always do, but we generally expect that to be case in zigzags. So anyways, what I think here is that in the ABC progression down, we are somewhere within the wave C. That is my general thought process. And let me just check one more quick thing here. That does not fit in. No, that does not fit in still. So just do one thing here. Yeah. So what I think is that C lag may have one more down lag remaining, and it may be progressing as a diagonal structure as is represented by the white trend lines. What does that mean is that some short term short plays can be made on gold. However, I will not be very keen on them because in a diagonal structure, the movement is slow, and as soon as the structure is complete, the upside movement can be very fast and take out all your stops in seconds, less than seconds actually. So the play here will be to observe this diagonal formation, which generally will be something like this. And as soon as that is complete, then I'll be looking to consider longs. Of course, I'll use the trend line. And whenever the market establishes itself above the trend line, then I can consider taking longs. And as long as the market is remaining sluggish and going downward in corrective formation, we can take some very small short-term sell-off positions. So let me just be a little bit more specific here. Hmm. One more thing that comes to mind is that if it's not a diagonal, then we can also count this like this, because the 4 and the 2 seem to be having a little bit of commonality in terms of time. Now, as I said, since downward movement is also possible, what I will do is not look for any longs as long as the market is below the wave 2. So long story short, in conclusion, I think I did take a little bit of time here, but then again, this count was a little bit unclear. So anyways, the conclusion is here that longs I'm be looking to consider only above the wave 2 high, which is currently standing around 1953.92, and as long as it is sustaining below it, I'll look to consider other possibilities, like if it's a diagonal, if it's still continuing, or if it's continuing as a double zigzag maybe. So wait and watch on gold, no clear trade right now. Now let's head over to S&P, which is a little bit more clearer than all of these. Now, good thing is S&P did hit our target as well. The minimum target that we were looking for was, let me just see. So yeah, the minimum target we were looking for S&P was 23.6 level, which was at 44.90, and it was of course discussed in the last webinar and perhaps the webinar before that as well. So at least on 28th of July webinar, which was, let's go to 15 minutes. So we knew about this target from 28th July webinar, and yeah, this trend line as well, etc., etc. There was a detailed discussion on it in that webinar. So as also is the thumbnail of this particular webinar, SPX hits the target, which is the 23.6. So now what is left to consider is, are we going to see a move till 38.2, or is it going to go up from here? So now I have this on this alternate chart just for the sake of clarity. And yes, by the way, before we consider this discussion, do keep in mind I was able to track this leg down in live market, this diagonal down, and also take a trade long on over here. I'll actually show you in the group post itself. But let's now just consider the analysis. So see, the minimum A down, B up, and C down is already complete. The trend line has not been breached. So in generality, you will like the market to establish itself above the trend line. Let's say a price action like this. Something is like this we will look for, and this will be our, let's say, trigger for longs, right? So roughly speaking, this is the kind of setup we look for in a situation like this. So none of that has happened. So now let's see what possibilities are left on this counter. So first possibility is that we just analyze it from this point of reference, which is the low around 4487 something. So around 4487, what we are seeing over here is that the market has given A up and possibly a B down and then a C up. So short term wise, I can take longs above this high, and this will be short term scalps. Like I'll be going in for 2, 3, 4 points maybe. not much. If it goes up very fast, then that's another case. But as such, I won't be waiting for a very big move. Why is that? Remember, as I said, it has gone down as an ABC from this point, right? And it is currently reversing from 23.6, which is here. So there is a possibility that this market may want to go to 38.2, right? And if it does want to do that, then it will do it like a double zigzag formation, in which case it will be like this. First zigzag will be W, which is already complete here. Then this correction, which we are right now seeing, is called an X. So let's say this correction completes somewhere here. And then there will be a stronger leg down, or even if not stronger, a leg down which will take out the low, which will be called a Y. So which is the leg which we expect will take the market below 23.6 and to 38.2. Now, for that reason alone, I will, if I do enter longs, will not be interested in holding them for too long, right? Second thing I did mention very clearly was that if the market establishes itself above this trend line, by establishes itself, I made it very clear many times, is that the market takes support on the trend line and then takes out the high, takes out the peak, right? Then I might consider longs, which I might be holding for a little bit. But other than that, that's the setup, right? We wait for the market to clarify itself. Short-term long opportunities are possible here, but overall we wait for the market to clarify itself for the upside. And on the downside, we can always just place an alert around 44.95, I would say. If it takes that out on the downside, then I'll be considering short trades. And count wise, let me just go on the shorter time frame and show. Count wise, it is following our counts really well. As I said, I was able to track and trade this. And currently, let me just correct the counts here. This is your A up. This is your B down. This is your C up. This will be your C, and let me just make it a higher degree. The hell. There you go. Now this is a corrected count. Now this arrow was drawn when this market was somewhere here, because I wanted to, I was thinking that this will go down for C, which it did. And now the trade setup becomes that above 4531, quick scalps I would look to take for a few points, minor movements. So that's the updated view. And I also wanted to show you the live trade here. S&P's 500 5-minute updated. So this is the trade, where it is. Yeah, there it is. So I did minor longs. There is the trade. As I was saying, I was able to track the diagonal in live market and also able to trade the break of it at 4509. And then I exited it at 4518, right? It was not a very big trade. About 2 hours, 4 minutes it lasted. And actually, after 4518, which was my exit, the market actually reversed for the correction. It reversed from 4520, just 2 points afterwards. So as you can see, all these trades were posted live on my Slack group alongside other trades on S&P, crude, gold, etc., etc. And as I've already mentioned, if you want to know how to get access to it, you can contact me using the contact us page in the description. So that's about it for my take on S&P. Let me just move on to Nifty, which actually performed exceptionally well and followed the analysis to the point. And after Nifty, we will take a look at Bitcoin. So there it is, the chart of Nifty. Now, in our last discussion, I did mention very clearly. Let me first see what date we were discussing. Yes, so somewhere here we were discussing it. So I did mention that the minimum downside movement may have completed here. That was one of the two counts. And the second possibility was that this was just the A and this was continuing sideways for a B. That is, anything within this box range is sideways. And then it will break again and take this low out for the C. So basically, let's say this was the B and this is the C. This was discussed in our last, what do you call, webinar, or the 74th webinar to be precise. And it did happen that way, like it did that. And we had some clues here as well. Like for instance, it was taking resistance or trying to take resistance at the trend line, this green trend line. It was able to break above it for a little bit but could not sustain above it and then broke back, and this gap down was suggestive of bearishness. But anyways, long story short, I was able to take multiple short trades, like literally many short trades I was able to take from here to here. And surprisingly, this move was way stronger than I was expecting. If you just compare this leg with this, you will get what I mean. So the trades were, they went exceptionally good. But now let's see what is happening on this counter right now. First of all, this market has now successfully gone below the green channel. It has done that in the minimum required progression of the zigzag count, which is what happened here. Yeah, so it is suggesting that the minimum is complete here, or what do you call, the minimum correction is complete here, right? Now, the second thing is, or I should say, the more important thing here is to watch out for this green trend line. As you can see, the market is already taking resistance here, right? You can see that. So the idea is that we would like the market to, even if it goes above the current price, we would want it to take and keep taking resistance on this trend line, right? So near the second test, something like this, or even if it's here, if it still takes resistance here, then I'll be considering short trades on this counter. Now the idea of the counts will be very simple as well. Simply, we can think of it as a bigger correction continuing in the downward direction. Let me check one thing here. If this webinar is working or what. 1 second. Yes, it is working. So yeah, as I was saying, the idea for the counts is also simple enough. We can always think of it like a W and then an X continuing. That's why I said the green trend line can take another test. Now, at the same time, we have to be mindful that this correction itself is complete in three waves. And this does seem to be suggesting that reversal may be forming here. Classic technical analysis will suggest that a break of this level, what is this? 19545 will be an opportunity for long trades. I do not disagree, but as I said, we have to be mindful of the important trend line over here. Long story short, just wait and watch. No real clear trade here, right? If the market sustains above the trend line, I'll be considering long trades. If it takes resistance, and shows some sign of weakness like a big bear bar, then I'll be considering shorts. So just wait and watch on this counter. Now let's head over to our last chart of BTC. This one, there it is, BTC. So we did seem to be having a possibility of a diagonal formation here. Actually, let me remove this. So this is what I think may be happening here. Let's just ignore the red. ABC, etc. Now, I'm not very pleased with this count because the trend lines are a little bit, they are not at the proper angles. But this is the only clear possibility which comes to mind when I was looking at this chart, right? Of course, as I said, this is a low probability setup. So there is a chance that I will need to update this count very soon. And this may not be the right count. But so far, what I could see was that perhaps this market is continuing as an expanding ending diagonal. And it is currently in the last leg. So if it's in the last leg, then that basically means this should be the A, this should be the B, and this should be the C. So this will complete our fifth leg of the diagonal. More or less, it should go below this low. What is this? 28587. Why I'm saying this is a low probability count is because it has gone up for the wave for a little bit too fast, right? So that's why I'm not very much in favor of this count. But long story short, if it really does go down for the fifth wave, then it will suggest or give us some long trading opportunities. For instance, if it, let's say, the price action really does go there for the fifth wave, then we can just put an alert around 29,320 something, and that will be our long setup, right? Above that will be our long setup. So Bitcoin, yes, no clarity for now. Short side possible, and I'll consider it below 28,830. Other than that, I think it is something to avoid right now. It is not something to trade for now. It has been unclear for quite some time. As you can see, the market has remained choppy and within a very tight range. Not very tight, but yes, for Bitcoin itself, a tight range, I would say, not by general standards. So that's about it for this webinar. I hope you guys enjoy it. And as I say, always make sure you hit the like button and share the content. We definitely need to have a much bigger audience so that I can produce more of this quality content for you guys. So if you are on some forum websites, if you are in some Telegram, WhatsApp, Slack, or Discord group of traders, do make sure to share it over there and help us get more viewers. That's about it, guys, and I'll see you in the next one.